Bitcoin 4-year cycle. Good day everyone. Today we will explore one of the most important and often misunderstood dynamics in the crypto market, the Bitcoin 4-year cycle. This session will focus on understanding halving, historical price behavior, and most importantly, how timing, not price, drive outcome in the market. Okay, the first is, what is halving? Bitcoin halving is a built-in protocol event that reduces the mining reward by 50% approximately every 4 years. This mechanism directly reduces the rate of new Bitcoin entering the circulation, effectively lowering its inflation rate over time. It is one of the core features that differentiates Bitcoin from traditional fiat system. So why halving matters? From a fundamental economic perspective, halving creates a supply source. When a new supply decreases, while demand remains stable or increases, the natural outcome is upward pressure on price. This dynamic has historically been a key driver behind Bitcoin's long-term growth. This is the historical data. If we look at the historical data, we observe a consistent pattern. After each halving event, Bitcoin has experienced significant price appreciation within the following years. For example, in 2012, the price increased from around $12 to over $1,000. In 2016, from roughly $650 to over $2,500 within a year, and in 2020, from around $8,700 to above $50,000, and in 2024, from $60,000 to $120,000. This is the market cycle. However, Bitcoin does not move in a straight line. It follows a repeating cycle consisting of 6 phases: bear market, accumulation, halving, bull run, euphoria, and finally a correction or crash. Understanding where we are within this cycle is critical for decision making. The timing is the key. Historically, the market begins to recover and accumulate approximately 6 months before halving. The halving event itself tends to be relatively natural in price action. The real momentum begins 3 to 6 months after, with the peak typically occurring 12 to 18 months later. This is the diminishing return. One important trend to recognize is diminishing return. Early cycle delivered exponential gains up to 95 times. This decreased to around 30 times in 2016, 8 times in 2020, and approximately 2 or 3 times in the most recent cycle. This reflects a maturing market with increasing capital efficiency. There are several critical insights here. First, halving does not trigger immediate price increases. Second, the strongest growth phase is delayed. And the third, market peaks occur well after the halving event, not during it. Misunderstanding this point often leads to poor timing decision. So when is the optimal time to enter? Historically, the best entry point occurs during the bear market phase or 12 to 18 months before halving, when sentiment is low and prices are relatively discounted. Conversely, entering during peak euphoria tends to carry the highest risk. So where we are now? As of today, following the 2024 halving and the 2025 peak, the market appears to be entering a correction phase. This aligns closely with previous cycle, suggesting we are likely in the early stage of new accumulation period. So this is the future outlook. Looking ahead, the next halving is expected around 2028. Based on historical pattern, we can anticipate a potential bull run in 2029 and a peak around 2030. While exact prices are uncertain, the timing structure has remained remarkably consistent. What is the strategy? A practical strategy based on this cycle will be accumulated during periods of low sentiment, hold through the growth phase, and gradually take profit during periods of extreme optimism. This approach emphasizes discipline over speculation. So this is the conclusion. To conclude, Bitcoin is not random. It is cyclical. The halving mechanism introduces predictable supply dynamics, and while price level may vary, the timing of market behavior has shown consistency over multiple cycles. Ultimately, success in this market is less about predicting price and more about understanding timing. Success for you.